Is the trade desk, ticker symbol TTD, a good buying opportunity? Well, that's what I'm going to talk about in this video. If you follow this stock, then you know that it is down massively. It's been a complete bloodbath. It's fallen off a cliff. Call it Mount Everest, whatever you want. I mean, this thing had a serious sell-off, and the only reason for it really was because they missed their revenues just by a little bit, and typically they always beat. So when you have a stock that starts to trade at a high PE ratio, analysts and investors start pricing in perfection, and one little wrong turn and boom, the stock goes. And that's what happened to the trade desk. And in my opinion, I still think this is a great company. They're like a digital marketing advertiser company. One of their competitors is Roku, who's in the space. But other than that, I mean, they don't have too many competitors. And I think this is a good buying opportunity. So let's jump right into it. The first thing I want to show you guys is how much this stock has sold off. I mean, it is intense. Obviously the sell-off or the selling pressure from the overall market is not helping, but nonetheless, not even from its highs, just from where it was consolidating here, we're down 56% pretty much, okay? Insane. So obviously the cheap can always get cheaper, right? And this is a mistake that I've made previously, and I still do it sometimes, where I start buying the dip and guess what? It just keeps on going. Now, this is what you really should wait for, is what's happening right now. Okay, you can see that we found a bottom here, right? And we were stuck below this 21-day EMA, right? For the longest time, right? You just couldn't break above it. I mean, this is clear as day. And then what happens here? We finally break above it. We start holding. And now we're actually above the 50-day moving average, this blue line right here, okay? This is like a prime example of like a textbook reversal, right? You got the sell-off, you got the consolidation, and we just now got confirmation being above this EMA. So we can zoom into the 1 hour as well, right? We are above the 200-day moving average on the 1 hour. You can see ever since we've sold off, we have not gotten above that. So in my opinion, I think this is a great time to get in to the trade desk and ride this reversal back up. Now, the next question is, where do you think it's going? Well, I mean, obviously, if you have a long-term outlook, just hold it, right? Because this thing is undervalued compared to where it's been trading for a long time. And I'll get into that a little bit here in a second, but if you want to manage your risk, which I do always recommend doing, right? You could take a position here, right? And then you could put a stop loss down under this support here, because obviously if we break that support, right, we could be going lower, but nonetheless, we're up 4% today. I hate chasing stocks. So, you could wait for a pullback, maybe see if we, get a pullback closer to this, moving average or so, and then take a position. But nonetheless, I definitely think this is something that should be on your watch list. Again, after this huge sell-off, I mean, there is a ton of room for this thing to go up. And you obviously could just take a day trade or a swing trade, get in, ride the momentum, and then get out and take your profits. Or, if you're a long-term trader, there's no issue just, starting a position here and then dollar cost averaging, as I mentioned before. But I also want to go into, some of the fundamentals of the company. So we can take a look at that if you're more of a long-term investor, and look at the PE ratio to see if this thing is, undervalued in that regard, compared to how it's been trading, previously in the past. I like to always look at that, because obviously if a stock has had a high PE ratio and now it's like lower than it's ever been, well, to me, that's like, okay, that's a good buying opportunity. Like, there's a reason why this stock never really gets below that when it comes to a PE ratio. So first things first, as I mentioned before, the main reason why the trade desk is even selling off, in my opinion, I mean, there could be a few factors, but one of the biggest reasons why is that they missed on their projected revenue. So the expectations, the market expectation was 582 million, and they came in at 575 million. Now, the kicker with this one is that the trade desk the history of the trade desk when it comes to earnings is like they never miss. They like almost always beat. So this is like the first miss in a really long time, which kind of frightens, some investors. As I mentioned before too, when you have a stock that's trading at a high PE ratio, it's priced to perfection. So one little mistake and the markets are going to punish the stock. In my opinion, I mean, this is way, way overdone. But again, it did have a high PE ratio, okay, which I'm about to go over here in a second. And so now it's getting to a level where it's getting a lot more attractive when it comes to like a value standpoint, right? And especially when you get into a market that is, kind of shaky right now with everything, people start looking for value plays and the high risk, stocks start to take a hit. So another thing I want to mention real quick too, and I like to see this, right? The number of hedge funds holding this stock is 63. That's a pretty good portion of hedge funds holding this stock, which, should give you some confidence when investing in it, because if the big institutions are doing it, then they're seeing things that we're probably not seeing. As I mentioned, I want to take a quick look at the fundamentals, and you can see here, right, I have the total revenues pulled up and the net income. And I mean, look at the total revenue. I mean, this is beautiful, exactly what you want to see. Honestly, it kind of reflects the stock previously. But nonetheless, we've seen a huge dip now. And then you got net income, arguably even more important because that's what you're taking home after all of your expenses and everything. You can see we actually took a little dip here in 22 and in December 2022, and now we're back on an uptrend, and we're seeing more net income than we ever had for the company. So those are good things. So the next thing I wanted to take a look at is the PE ratio. Okay, so you can see here that, previously, I mean, this stock has traded as high as, what is that? 191 price to earnings. I mean, that's insane. Just to put things in perspective, the S&P 500 trades at, about a 19 or a 20 PE ratio. And that's like your top, 500 best companies in the market. So keep that in perspective. But obviously you've seen this thing fall off a good bit, and it trades around, let's say like 65 to 40. So yeah, I would say, probably your average around like 50 or 60 is what this thing typically trades at. And now we're trading at a 32 price to earnings. And this is a forward price to earnings. So it's, taking into consideration their expected sales, right? Nonetheless, a 32 PE ratio, it's still kind of high. As I mentioned, the S&P 500 is going to be like 19 or 20. But when you have a company like this that is projecting to grow really fast, like this is a growth company, 32 is not really bad. Honestly, I think Amazon's trading at like a 30, and Meta is trading like the mid 20s, and sometimes a little bit higher than that. So to give you an idea, this is fairly valued for a company that has so much growth potential. I mean, as you can see here, a PE ratio of a 32, we have never seen this actually. I mean, well, arguably here, when was this? Back in January 23, we saw a PE ratio of 33 there, and you can see that we kind of bounced back up to that 65 level, right? So we did break that. We're the cheapest this stock has ever traded pretty much, right? So when you're asking the question, is now a good time to buy the trade desk? In my opinion, yes. As I mentioned, I went over the technicals. I think it's also set up for a perfect reversal if you want to day trade or swing trade this and just ride the momentum up. But if you're a long-term investor, in my opinion, I do think this is a great time to start dollar cost averaging. As always, I never recommend going all in on a stock. It's always good to have some more capital in case it keeps falling. You can keep lowering your average as the stock goes down. And again, you're in it for the long term. So you should be happy if the stock gets cheaper, right? As long as you believe in the long-term fundamentals of the company. One last thing I just want to pull up real quick is, the analyst price targets here. So you can see the low on the street is 49. Typically, from my experience, this might be like one analyst that comes out with like a stupid low rating, but it's always good to look at, the average, right? So you have 37 analysts, which is pretty aggressive. That's a lot of analysts. I mean, Nvidia has like 67 or something like that, which is probably arguably one of the most popular stocks in the market. So 37 is still good with a strong buy on almost 60% of the ratings, okay? And then another 16% on, a buy rating. So when it comes to the analysts, again, we don't trade based off of the price targets by any means, but it is still a good guide because they are, obviously estimating and projecting that this company is going to continue to grow. So what we don't want to see, obviously, is, low analyst estimates on top of the stock falling, and, you kind of get all these confluences that don't make sense to buy the dip. But, I mean, you can see here, I mean, 109, I mean, that's a pretty huge return. I mean, even if it returned that in 2-3 years, right? I mean, 86% return on your money. I mean, that's almost like a double your money investment. And that's only if we, make it back up to, 109, which is the analyst average. I mean, if we go back to all-time highs, you're looking at 140%. Again, long-term thinking here, because obviously stocks don't just go straight up. They make, higher lows and higher highs, gradually, and creeps its way back up. But I hope you guys found this video helpful. Let me know what you guys think in the comments. Is this a good buying opportunity? Are you invested in the trade desk? And do you think that this thing is about to reverse? Again, hope you found this video helpful. Like, subscribe to the channel, and I'll see you guys in the next one.